So, Rupert, eRetail has been acknowledged as an area that's had a significant knock-on effect into the global property market, particularly the commercial market. What are the reasons behind this, and how do you expect this to affect the future of valuations?
I think that's quite interesting, because I think the term knock-on is interesting in itself, because one could be forgiven for thinking that you'd be just talking about the physical property in terms of the retail stock as we know it, so high street shops, retail parks. But it's had a positive knock-on effect in terms of the distribution sector in the UK. It's all arisen out of the rapid growth of technology. Technology has obviously enabled internet retailing, e-tailing to occur. Now what that's done is make it very difficult for physical stores in some regards, but actually it's assisted the distribution market. I think if you look at the tenants of the physical stores and the distribution units, about 50% of the lettings in the UK, by numbers of units, you're actually letting the retail high streets to the same tenants as you are many of the distribution units. I think that's the way the property person would look at it. The way the retailer itself would look at it is it's all shopping, it's all sales. I also think one could be forgiven for thinking that e-tailing is easier for the retailer than selling through a physical store. But of course, the associated costs with distribution to the end consumer can be quite massive. And I think some people maybe forget that. I think also it means that the consumer is becoming ever more demanding, and we've seen Amazon now deliver within a day in some suburbs and in central London. So the consumer is becoming ever more picky.
And certainly, what would that be the effect of that be for the valuations market moving forward?
Well, I think the valuation market, we follow the deals in the market, but we're at the coalface. We understand how clients are bidding for property. I think locationally, it's ever more critical to be in the right location and in the right high street. Shops have by and large become smaller. We've noticed a number of department stores really struggle and even close. We've recently had Debenhams in the UK announce that they're going to close 50 stores. And I'm talking about the UK at the moment. I think it's important also to recognise that the UK, I think globally, is at the forefront of internet retailing, and that might be partly the consumer person in the UK, but also it's probably got something to do with the population density. So it's easier in terms of distribution channels, getting a product from a distribution warehouse out to a consumer's front door or office. I think America lags quite considerably, and I think if you look at Europe, I think the UK is up to about 16-18% penetration at the moment through e-tailing. I think France is about 10%. Germany is 10%, France is about 7 or 8%. And I think the rate of growth in the UK is starting to slow in terms of penetration.
And talking about that, I mean, obviously retail and e-retail is a shift forward in terms of how consumers engage with their products. Disruptive tech, Thomas, obviously this is playing a driving role, particularly in the Asian economies. Asia is now outpacing the United States and Europe in terms of expansion. What kind of role will PropTech play in the future, particularly within the Asian region?
In the past few years, many people talk about PropTech and also FinTech. Based on the research, I found that in 2017, the global investment in PropTech was about 13 billion US. You can see it's quite a lot, which represents about, say, 400% increase year on year. To me, as a property person, PropTech is also a way of what we call like asset enhancement or value creation. So in Asia, many people talk about PropTech, probably like that include property management, project marketing, VR, 3D printing, something like that. But the problem is about cost and benefit issue, especially in Asia. Many people think that the initial investment is huge, but how about the return is a big question mark. But in Hong Kong, I can see this is just a startup business for many PropTech companies. But in longer term, I think it's good for the industry.
if you look at Asia as a whole, are there any other centers outside of Hong Kong that you would consider real investors in PropTech that can be disruptive in the future?
I would say in PropTech, Japan and South Korea, they did quite well, especially in the South Korea, like eRetail or e-commerce. In the underground, on the platform, they have some like what they call is a e-shopping center or e-mall. They just have a QR code along the platform. You just scan it and pay for it, through the fintech. This is one of the I would like this was an example of PropTech.
John, moving to you. In some cases, you don't really need any great changes within the market. The commercial real estate market in the United States is still, there's a huge amount of appetite for investment within this area. Can you explain why 2017 was such a good year for the US and what are the driving factors behind that?
Sure. Well, the U.S. expansion is the second longest on record right now. Unemployment is at cyclical lows. When you look at everything that's taking place in the U.S., there's a lot of dry powder. There's a lot of unallocated capital, whether it's debt capital or equity capital. Supply right now is not in line with demand. There's more demand for real estate right now than there is supply. So even though the interest rate continues to rise in the United States, cap rates have remained fairly stable. And that's because there's so much demand. And not only do you have demand within the United States, you've got a lot of foreign demand for real estate right now. The U.S. has been and always will be considered to be a safe haven for capital. So we're seeing a lot of capital coming in from Asia. We're seeing a lot of capital coming in from Europe. While I was here in the Middle East, I've met with 3 different clients that have capital that they're investing in the U.S. One for the first time, a major market. And one that's actually in a peripheral market. And when you think about Middle Eastern capital coming into the United States and not targeting New York or San Francisco or Chicago or LA, but targeting something in the Midwest and something in a tertiary market, it speaks to the demand for U.S. real estate.
Absolutely. And how long can this last for? I mean, obviously, it's great that currently there's a huge amount of interest, and the performance, as you mentioned, has been very consistent. But do you see any signs of that changing in the near future?
If we could answer that question, we'd make a lot of our investors and our clients very happy. I think everybody feels that things are peaking a little bit in the United States. I think people believe that a 9-year expansion is a long expansion, and having to understand that good things don't last forever, and that things will at some point come to an end, I think is everybody's reality. But I think for the foreseeable future, probably the next 18 months to 2 years, nobody sees any warning signs on the horizon, and nobody believes that there's going to be an economic event that's going to change things.
Very good. Steve, looking at the UAE, there's been a change in dynamic about how people consider workspace, particularly obviously in the commercial aspect, and how do big companies now utilize their offices. Co-working spaces, sharing offices has now moved. It was very popular, or still is very popular, and started in Europe and Asia and the US. It's taken a little while to catch on here, but it's now picking up. What are the factors now that drive forward this co-sharing environment as a workable model within the UAE?
Yeah, I think it's been slow to catch on. I don't think we're well as advanced as the rest of the world, or the major cities, for the sort of the WeWork and the co-working space here. We've had traditional serviced office providers here for a number of years, but in addition to that, what the UAE has done sort of very well is provided free zones and things like that, and the licensing here has allowed companies to take very small office space and flexible conditions. The main drivers, I think, are it's occupier driven. So what do tenants want? And I think from the corporate point of view, generally corporates are now requiring a lot more flexibility for their staff. They want more accessible offices. They require more collaborative space, and they like that flexibility, whether it be short-term or long-term, in terms of leases. So they can add space as the headcount grows, drop the space if there's an economic downturn. In the UAE, we've not really seen that work because the UAE is fairly small. Everybody's quite closely connected. So these sort of co-working spaces have been tended to be in the more urban areas where there's very good transport links. But Dubai is fairly small and well connected, so we've not seen it take off, to the same extent as other parts of the world, but we expect that to do so. Part of that, I think, has been Dubai's got a lot of vacant office space. So there's a vacancy rate of about 25 to 30% across the city. So there is the space available. Long-term leases are not common here. So you can take a 1 to 3 year, 5 year lease here. So that does already give a bit of flexibility. So I think those are the sort of reasons why it's not quite taken off in Dubai.